This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome to Bloomberg Businessweek Daily. I'm Carol Massar, along with Tim Stenivek. We've got a lot going on this Wednesday, August 5th, to say the least. Got to say, in terms of the S&P 500, we came out of the gate a little bit stronger, hitting a record. We're still going to be, it looks like, maybe at a record here. But we did run out of some steam. We're definitely off our highs of the session. Little changed overall when it comes to the major averages. Slightly higher, call it unchanged on the S&P 500. Slightly lower, down about 1/3% on the NASDAQ 100.
Yeah, but here's the thing. Even if we're in the green, just 1 point higher on the S&P 500, then we have a new record because of what happened yesterday. I mean, so far this month, Carol, and it is the beginning of the month, the S&P 500 is up 3.4%. The NASDAQ Composite's up 4.3%.
I just got to say, we have a lot going on this August 5th. And it does feel like it's a must-see lineup. And it does feel in an odd way that all of it is kind of connected, if you will. And so what do we have coming up? The day after those SpaceX earnings. We were obsessed with it yesterday. We're still following through today. We do see the share price down following the company's splurge on AI efforts. Next up, we've got to talk about the $101 billion unlock, that is, when it comes to shares. More shares, a lot of shares coming on the market. That happens tomorrow. But also on AI, Tim, we've got G Squared's latest fundraise that's already investing in names like Anthropic.
Yeah, we've also an investor in Polymarket and more. We're going to be joined by G Squared's Larry Aschebrook, along with Bloomberg's Bailey Lipschultz in just a few minutes.
And something you are bringing to the table on this Wednesday. I keep thinking it's Thursday. It isn't, though.
Yeah, Robert DeNault is going to be joining us. Speaking of prediction markets, he's head of enforcement and legal counsel over at Kalshi on the ongoing legal cases that just continue to pile up.
Yep. And then on our core, we've got to get to it, guys. The massive bond market. We did have the Fed meeting last week. We're going to get into what's next for U.S. rates with Katy Kaminski at AlphaSimplex. I did a deep dive, a story a few years ago that she did. She said something about where the 10-year might be headed. We were like, what? But, here we are, and we continue to talk about rates going
Didn't
higher.
quite get there.
No.
But it got close.
But yeah, exactly. So
We'll
curious.
see where she is in this cycle.
Yeah, speaking of prediction markets, I'm curious what she's predicting about where rates go next. We got it all tied together. We want to get going, though. Let's kick things off with a check on the trade. Here is Charlie Pellet.
Thank you very much. And here's what's going on. We got the Dow pushing higher, as you both pointed out. Any advance today going to be a record on the Dow, up 465 right now. That is a gain of 0.9%. S&P meandering, fluctuating. Take your pick right now, higher by 2. Little change there, up under 0.1%. But NASDAQ selling off, as is the NASDAQ 100 index, as is the SOX, the Philadelphia Semiconductor Stock Index, down now by 0.3%. AMD after earnings weighing on that index, down 6.1%. Bottom line, NASDAQ down 125 now, down 0.5%. NASDAQ 100 down 0.3. All of this with the VIX below 16, Wall Street's so-called fear gauge. The 2-year currently yielding 4.18%, the 10-year 4.61%. Spot gold is up $175 the ounce, surging now by 4.3%, $42.53 the ounce on spot gold, while West Texas Intermediate crude keeping an eye on developments out of the Strait of Hormuz. WTI $74.91 a barrel. Right now, crude WTI down 1.1%. Barrel of Brent holding below 80, $79.15. Brent crude down by 0.3%. SpaceX after earnings, it is down now by 11.8%. Last night, the company disclosed higher than expected spending on its AI business. And of course, we've got that $101 billion unlock tomorrow. Let's see what happens when insiders start selling. SpaceX, again, bears repeating, down 11.8%. And again, after earnings, Advanced Micro Devices down by 6.1%. I'm Charlie Pellet, Tim and Carol. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. All right, we do want to get to, certainly safe to say, is the big earnings story of the week. Certainly today, SpaceX shares falling after the company disclosed higher than expected spending on its artificial intelligence business, really spotting an inaugural earnings release that broadly exceeded Wall Street estimates. But Are investors perhaps not understanding the bigger story and the necessary spend? We want to get into it.
I bet Elon would say that.
I don't work for him. I'm just saying it's something to consider. All right, let's get to it. We should point out investors are bracing for the next potential hit. We're talking about $101 billion worth of stock becoming available for trading tomorrow. Back with us is Bloomberg Intelligence Global Head of Technology Research. He is Mandeep Singh. He joins us here in New York City. What?
I want to start with the lockup because that's coming tomorrow.
Go. Yeah.
With this type of thing, is it priced in? Like, we don't know what the behavior of these investors will be tomorrow, Mandeep, but is some sort of volatility already priced into the stock right now?
I mean, if nobody wants to buy the stock today and it's down 10%, when the float is doubled, you can expect more pressure on the stock. So it's really a question of how much stock is available.
But just because the lockup expires doesn't mean people will sell it, especially at this price, right?
Yeah, but at this price right now, nobody is buying it. And in fact, the stock is down 10%. So it's in anticipation of the fact that there will be twice the float available, next week. And so from that perspective, it makes sense that, market is anticipating that doubling of float. And given the fundamentals, people feel this is the fair price right now.
That doesn't seem good.
I mean,
it
depends on who you are.
with the company like SpaceX, I mean, what they outlined yesterday in terms of near-term goals and 2030 goals of $1 trillion in revenue, I mean, look, it sounds ambitious, and the reason why the market is not believing, Elon Musk right now with SpaceX forecast is because of what's happened with robotaxis and some of his other forecasts. I mean, clearly the timelines have been shifting, and even though he has done great things in the meantime, but when it comes to putting numbers and, kind of giving timelines, his track record isn't that great. And so from that perspective, everyone is seeing, okay, they're talking about 10 gigawatts in capacity by 2027, whereas currently they are at 1.4, targeting 2 gigawatts by year end. How do they get from 2 to 10? Like, none of the hyperscalers have been able to do that. To get to from 2 to 10, you need up to $400 billion in capex. That's not going to happen. Even $200 billion is ambitious for a company that doesn't even generate $3 billion in operating cash flow right now. So all these questions around funding, and look, this company is already $1.5 trillion in market cap. So, and they have $100 billion on their balance sheet. So it's not as if they're like a neo cloud that has to raise a lot of money. They already have money.
Yeah.
But the scale that he's talking about is just too big to believe. And I don't think they're going to get to 10 gigawatts. But even if they get to 6 gigawatt, they'll become the fourth largest cloud provider after Amazon, Microsoft, and Google. So that's huge. So you, as an investor, you really have to figure out what is realistic versus what is at the high end. And I think the realistic target is 6. I mean, they could do up to 6 gigawatts, and that would be huge in the context of cloud revenues.
Yeah. So that's what you think is realistic.
I think so.
And not so shabby.
I'm in between. So I feel like this is the part where everyone seems to be making money right now is in cloud hosting. The hyperscalers are making money, whether it's Microsoft, Google, or Amazon. They had great prints doing what? Selling compute on the cloud. That's what SpaceX is saying they want to do. And they have the balance sheet to do it, just not at the scale Elon talked about last night.
Yet.
So even though that right now the biggest business is Starlink, connectivity is the biggest segment, the thing that powers them to these audacious 2030 goals is becoming not necessarily a hyperscaler, but to selling the same type of compute that is available at Amazon, at Microsoft, maybe at Meta soon. I don't know.
Yeah,
we'll find out. And the neoclouds,
CoreWeave, Nebius.
So that's SpaceX's value proposition right now, according to Elon.
Yes, and in fact, you don't even have to go to 2030. He said by the end of this year they will hit $100 billion in ARR, and based on our numbers, 70% of that will come from that AI piece, and almost 50 to 60% will be cloud hosting.
Okay, so I'm glad you are bringing this up. We have a redhead crossing the Bloomberg terminal that fits right in this. Microsoft's AI sales, this just crossing, mostly come from OpenAI, this according to disclosures. Microsoft disclosures suggest OpenAI is about 70% of AI sales. We see Microsoft extending a drop to a session low earlier of about 1.5%. It's bounced up a little since then.
Yeah, it's bounced off that low.
Yeah, it's at down 0.8% right now. What does this tell you?
That there is incredible concentration. So when Elon says they will get to $100 billion in ARR and 70% of that is AI, the cloud compute consumption will still be Anthropic, or I don't think it's going to be OpenAI in the case of SpaceX, so that's not happening.
Yeah.
It'll be either Anthropic or Google. And those are the two companies that they've already partnered with. So they talked about $47.5 billion in backlog. Mm-hmm. Bulk of it comes from Anthropic and Google. And they are looking to add more customers, but there is incredible concentration in this cloud consumption of compute. And that's what you see with Microsoft.
We've got to wrap up. I know we could go on. Concentration, though, on its own is not necessarily a bad thing, is it?
Yeah, and look, another aspect of this is for them to get to $100 billion in ARR, and they said they are committing to NVIDIA chips, so no other chips.
Right.
I believe NVIDIA will backstop a lot of this SpaceX build out. They need the money. SpaceX is the one who is buying chips from NVIDIA, but NVIDIA will be the one who will be supporting SpaceX in terms of raising that capital, similar to what NVIDIA has done with other neoclouds like CoreWeave and others.
All right, 30 seconds. Is that a problem, though, of these backstopping agreements?
Well, not as long as they can generate revenue. So if XAI can generate revenue, then that can generate the next tranche of what they would want to buy from NVIDIA.
One story leads to another. Welcome to the world of AI. And Mandeep, you always walk in at the right time. Always. Mandeep Singh, Bloomberg Intelligence Global Head of Technology Research. All right, big tech earnings, AI trade, yes, always on our mind. But so too are, and we share this with our viewers who ask us, cover the bond market. We do cover the bond market. We love it. Fed policy, what comes next? Let's get to it. So great to have back with us. I keep asking Talia, where's Katy? Where's Katy Kaminski? She is here with us.
There she is.
Chief Research Strategist and Portfolio Manager at AlphaSimplex. She joins us from Boston. It is so great to have you back with us. We really do bring your name up so much. We love talking to you. I want to take you back to August of, I think it was 2023. You came on with us. And when we asked you how high 10-year Treasury yields could go, you said 6%. Why not? It's a level last seen in 2000. We know that. And the driver is the need to build more risk premium into long-term debt. We were a bit shocked. We were like, really? You say, what now? Because it does feel like higher rates continue to be part of our narrative, and that's because inflation is still a little bit sticky here.
Yeah, I mean, this is a very good question because actually the bond market has been really difficult to trade from a trend following perspective, which is what we do. And I think the challenge with bonds has been that, you've been through this back and forth regarding inflation uncertainty, particularly linked to geopolitical risk. But what's been interesting is over the recent period, despite the fact that, trend signals are pointing to higher yields, you're actually seeing some of that abating recently, and you've seen sort of a little bit of respite and sort of a view that growth is actually pretty solid, a little bit of a Goldilocks scenario that seems to be kind of playing out more recently in the markets. So I'd say for us, fixed income remains still very tricky, especially when you start thinking about longer horizons as opposed to shorter horizons, as you have to see how geopolitical risk really, really evolves in the next few months.
Did it become less tricky or more tricky after we heard from Fed Chair Kevin Warsh last Wednesday?
I mean, that's a good question. I think, really you have seen yields have come down. So there seems to be some sense that, even though inflation has been the key focus of the Fed, that sort of there seems to be a little bit of room for maybe we might start to think about cuts at some point a few months from now. And I think the market is trying to feel that out. You have seen that bond shorts, for example, have been a little challenging. And that's something that I think we have been noticing more recently. That was not the case earlier in the summer when you started to see geopolitical risk resurge. So for me, it's still really a back and forth between policy and reaction to geopolitical risk that's key for bonds.
Yeah, I'm glad you went there because we had a story also yesterday that bond traders have been spending millions of dollars to guard against sharp declines in long-dated treasuries that risk igniting a bigger bout of volatility in the $31 trillion market. So bottom line, the cost of hedging against a rise in treasury yields has surged since last week as traders piled on treasury put options on both US 10 and 30-year bond futures. Katy, I can't make sense of this economy. I mean, we have days where equities and bonds both go up. Torsten Slok of Apollo was on with us saying the 60-40 portfolio is broken because equity returns are driven by AI concentration rather than the business cycle, while bond returns are now driven by fiscal constraints rather than the cycle dynamics. How do you see it? Is it, like you said, it's difficult now?
So I think I like to look at correlations between stocks and bonds as a measure of what is really driving bond valuation. And honestly, since March, we've seen a very strong positive correlation between stocks and bonds. And as you saw some of that geopolitical risk abate, you saw bonds also coming back and sort of repricing some of the concerns. So I think for me, inflation, geopolitical risk has been a key driver for bonds. And when you think about that, it does reduce some of the diversification of bonds for investors. If we could see a nice resolution in some of the geopolitical risk and we could see sort of a normal Fed actually sort of driving interest rate policy and that negative correlation, then that 60-40 could be back to normal behavior. But as long as inflation matters, correlations tell us that we have to be cautious.
Wait, which one of those is a bigger if? In your words, a normal Fed or a resolution to geopolitical conflicts? Which one is more likely to happen?
Oh, that's a tough one because I'd say, the Fed is in a position right now where they have room to wait and see in terms of policy. And I think if we do see policy consistent with what people would expect, that I think the Fed policy will have a bigger impact on bond movements. But right now, if you can imagine from the Fed's perspective, with oil price and geopolitical risk and inflation a little higher, they have room to kind of wait and figure out how that's going to proceed. So I think that's why it's been hard to trade bonds, because there's not sort of a really clear trend in one direction.
No, it's a really good point. All right, so 10-year 461 by the end of the year, next year. Like, what are you thinking? What's your forecast?
Right now, I'd say that I'm pretty neutral. I think, before sometimes I've kind of been one that would forecast a much higher yield. I think right now, given where we are, I think all things are possible, but I think slightly lower 10-year yields could be possible later this year, especially if we see some resolution. Maybe getting closer to 4 again some point would be a potential, as long as we see geopolitical risks continue to be less of an issue for bonds.
So 3 more meetings left by the Fed. That means what in terms of, I've just got about 20 seconds here.
I'd say not too much yet, but
Okay.
it could potentially towards the end of the year if we see continued sort of reduced inflation numbers and also strong growth, but maybe some need to support the labor market. That could cause a potential for cuts, which is what the market wants.
So interesting. Hey, great stuff. As always, Katy Kaminski, she's Chief Research Strategist, Portfolio Manager over at AlphaSimplex. Coming up, we're talking with Larry Aschebrook of G Squared.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index fluctuating, yes, higher right now, but after a 4-day gain, we have got stocks swinging between gains and losses. The Dow, the S&P, they're both higher. Any advance today will be another record. The NASDAQ Composite Index, the NASDAQ 100 Index, they are both in the red. Right now, we've got NASDAQ down 122 points for the NASDAQ Composite Index. That is a drop of 0.5%. The NASDAQ 100 Index down 0.3. S&P right now up 6, up 0.1%. Again, the Dow surging 455 points. The Dow up another 0.8. 0.9%. By the way, above 54,535 on the Dow. The SOX, the Philadelphia Stock Exchange Semiconductor Index, is lower by 0.3%. The VIX right now trading below 16, Wall Street's so-called fear gauge. 2-year 4.18% with the 10-year 4.61% and the 30-year 5.16%. Spot gold up 4.5%, surging $183 on the precious metal to $42.63, while West Texas Intermediate crude down 0.5%, $75.37 a barrel. Brent has turned around in the past few minutes, a little change but higher by 0.1%. U.S. oil hovering near $75. Iran says it has agreed on a Hormuz shipping route with Oman. It is seen as a potential step toward a reopening of the critical waterway for energy supplies. Uber was out with earnings this morning. Uber shares down now by 6.6%. It did issue a bookings outlook that just met analyst estimates and said fierce competition in a key Brazil market weighed on trips volume. Rival Lyft will be reporting tomorrow. Lyft shares down now by 3%. So again, recapping the U.S. equity market, yes, at a record, but perhaps the key takeaway at this hour, little change for the S&P 500 index. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that's a Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, G Squared raised $2.3 billion for its 7th flagship fund. It is targeting investments in growth stage technology firms, as founder Larry Aschebrook predicts a coming reset in valuations, which is something we want to dig into.
Yeah, the firm has started building out the fund with stakes in companies that we talk about all the time. Anthropic, Polymarket, Nscale, and more.
Yeah, let's get to it. We welcome Larry Aschebrook. He's founder and managing partner of G Squared. He is out there in our Bloomberg News Chicago bureau. Welcome, welcome. Also, excuse me, with us is our Bloomberg News senior IPO reporter, Bailey Lipschultz. He's here in studio. Hey, Larry, we want to kick it off with you. First of all, welcome. So great to have you here on Bloomberg. Tell us about this fund, the companies you are targeting, the strategy, and I'm also curious, are there more new names to come, or do you just want to double down on some of the investments you've already made?
Well, first of all, thanks for having me. It's an honor to be here. On behalf of our 50 employees around the world, we're humbled that you included us today in your broadcast.
Thank you.
Yeah, it's exciting for us. It's exciting for us to be here. The fund, $2.3 billion. It's the latest of our flagship vehicles, really to do the same thing we've been doing for the past 15 years, which is support great companies in their growth stage, mostly through secondary transactions and saving some capital to help with primary in their growth phase, and really helping them manage their cap tables as they stay private longer. And we're excited about the companies we have in the portfolio and the opportunities set in front of us.
Yeah, Larry, just walk us through, if you can quickly, kind of the notion of this growth in the secondary market and what that actually means when G Squared can partner with a company like an Anthropic. And are you providing access to employees to see some liquidity, or is it early stage investors? Who's selling what you're buying?
Yeah, it's all the above, really, and that's changed over 15 years. Early days, it was heavy focused on employee shares. I think as the market has evolved and the secondaries have become a global asset class, with the company staying private longer, more and more of what we're doing is helping other managers and other GPs manage their liquidity by taking stakes in their portfolio companies to help them return capital to investors and help the company stay private longer. And so it's a combination of those things. It's everything from one-off individual secondaries when the companies have a need to change a life scenario to keep that employee engaged and involved so they don't leave to go to another business, all the way through broad employee tenders where you're making a bona fide offer at one time and a lot of capital up front, and the shares are bought in that way, all the way through to preferred managers buying the stakes that they invested early. And what we've seen as a trend since 2020 is actually about 70% of the deployment on the secondary market has been in preferred shares. So that's been a fundamental shift in the marketplace as companies stay private longer and the stress on the GP-LP relationship is amplified with funds getting to late in life with little capital returned. Other managers need to return capital. So we've been there to support their portfolio companies and to support what they need to do as GPs. And we're lucky to be where we're at, and excited about what's to come.
Well, before the deployment of money comes, the fundraising comes, and you just closed your seventh round, 2.3 or seventh fund rather, $2.3 billion in that fund, Larry. Compared to the other funds that you've raised, what was it like raising money in this environment? Was it easy? Was it hard? I know people say it's never easy to raise money, but there is a lot of money out there right now.
I think broadly in secondaries, the broader market has woken up a bit. It's now a bona fide asset class that's covered. Companies see the validity of it. Other managers, primary focused managers, see the validity of it. And LPs around the world have a desire to be involved in secondaries because it provides a bit of a margin of safety in growth investments by the way the capital is deployed. And this fundraise for us, anytime you set out to raise capital, it's hard. I like to tell our team all the time, raising money's hard, deploying it's easy, and selling it's hard. A year in, it's the quickest we've raised capital. Our target was just, for us in the scale and size of the concentrated portfolio, we need about $1 billion per fund plus our SMAs and co-investments to be meaningful to a certain set of companies, getting very large stakes. Here we were able to kind of get twice the size in half the time it took us in the prior vintages. And I think it's a lot of things, but mostly a testament to our portfolio management team that did a fantastic job coming out of the COVID environment we were in and the pullback. And when everybody was running out the front door, we were running in, so to speak, and deploying money at really, really great prices. And that those historical funds have done well, and raising capital at scale has gotten easier for us.
But Larry, walk us through how you're thinking about this current market. Already deploying in the seventh fund, you have Anthropic, Polymarket, and Scale, three companies that, when I talk to folks in the private ecosystem, are quite pricey, and there's a lot of competition for access to that. How are you thinking about it, whether or not this is a market that's maybe run too far too fast, and how you're thinking about deploying capital now and what that means through the end of this year and into next?
Yeah, I like to tell our LPs our job is to get involved in the stars of tomorrow today and do that before they're household names. And when they become household names, we know we've done our job right. And I think in those three examples, we took contrarian views, got involved early. They have grown to fantastic levels in valuation. I think the way we're thinking about the next chapter of deployment in our seventh fund is we expect some macro headwinds in the fall and into the winter months and maybe early spring, going through some midterm election cycles in the US and some volatility. And we're watching the macro indicators very closely. And we think that there's a higher likelihood than not that we see some interest rate hikes, which on the secondary market, the fundamental drivers are the 10-year yield and the federal funds rate, along with equity risk premiums in the public market. So as you have an elevated interest rate environment and a low equity risk premium, secondaries tend to do well. And we think we're going to enter a market that's more similar to the 2023 time period than what we've experienced in the past year or so. And we're going to be prepared to do the best work we can for our LPs.
You speak of stars, and I feel like with AI, there's lots of shiny new things out there, to say the least, Larry.
Yeah.
In the story that Bailey wrote, and I highly recommend everybody check it out on the terminal, it's all about you guys. He quotes you, or he points out how you argue that the market has become overheated. His competitors are chasing every hot AI name, which has driven valuations to become expensive. Just really briefly, I mean, what kind of correction are you looking for, and what names do you think are going to be maybe taken down? Just quickly.
Yeah, well, I think the specific names of inflated valuations that we view internally, we'll leave out of it. What I would say broadly in the market is when everyone's hopping on, it tends to not end well. And there was a period of time where it was very difficult for AI companies to raise money. We were a large investor, and if you look at the cybersecurity AI business, Wiz, it raised capital at a point in time post-COVID. It was very difficult to put together money at a $10 billion valuation. It goes on to sell to Google a couple years later at $32 billion. The time to make the 2, 3, 4, 5 X's in these businesses, in our opinion, for the most part of the names that you're all reporting on, have kind of were there, and we're looking looking for the next chapter and the next businesses for what we think will be coming over the next few years to get involved with today. And so I think it's natural, it's cyclical.
Yeah.
Valuations rise and fall, and deploying capital, you need to be very careful right now, just given the multiples that deals are getting done at and the FOMO picking up. Being in Chicago, we're able to be a little bit immune to that. I think that's one of the benefits
There's
of
a
being
Midwestern
here.
sensibility.
Yeah.
We feel it. We
Yeah,
feel it and
no New York,
appreciate
you don't
it.
even have a New York office. Come on.
Having said that,
I do wonder about SpaceX, because that was one of your investments. What is the status of that investment now? Do you still own SpaceX?
Yeah, we don't comment on our dispositions, but what I would say about SpaceX is first of all, betting against Elon is a good way to lose money, typically. And I think they'll go on to even greater things than today. I think fundamentally there's an issue with the IPO market that's being played out right now real time with how you see SpaceX trading. I think there needs to be some change on how and when options are allowed to come in. You have a massive business that's a fantastic business and shareholder creation event that's taken place, but you have a very small float, indices force buying, options coming online. You have a high push on the stock price on the upside, and then you have a massive amount of float coming to market. And so it's just a supply and demand situation where you're going to see these companies be stressed, even with positive results like you saw come out of the business today. So I think it takes some time to work that out. You need to get the float working properly globally in a massive business that raised a small amount of money compared to its private market cap. And I think SpaceX is an illustration of what's likely to come with many companies that will seek IPOs in the near term. We need to address the way that IPOs are done. It's going to continue to be an issue for the world's best, fastest growing, most dynamic, largest businesses.
Yeah. Larry, we have about 20 seconds here, 30 seconds here. Just walk us through how you're thinking, though, about deploying capital and how you're thinking about the exit environment. Are you looking for some of the bigger positions to go public later this year and into next? And would you try to sell before that IPO or immediately after?
really quickly, if you could, please.
Yeah, really quickly. Look, we have a job to do for our LPs. We look at harvesting our positions as they meet our return profile, and we'll continue to do that work, which has allowed us to raise the capital in which we've been able to. I think that the next group of companies we work on are going to be from the same fundamental kind of thought process, which is we want to partner with businesses, help them manage their cap table, help them work through the difficult issues, and stay private as long as they'd like, so they don't have to live their day in 90-day increments.
Yeah.
And have you all talking about the pros and cons of their public report. So
listen, when we leave and a guest and we have a million more questions, means you got to come back. So please come back.
I would love to. Thanks for having me, and look forward to it.
All right, Larry, thank you so much. We're back in a moment, everybody.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Little change right now on the S&P 500 index. Higher, yes. Any advance today will be a record, not just for the S&P, but also for the Dow Industrials. Wall Street, though, churning as traders digest recent stock gains amid corporate earnings. Also, hopes for a reopening of the Strait of Hormuz. So the S&P up 2 points now. Little change there. Dow Industrials up 403. That is a gain of 0.7%. Dow, by the way, at 54,488. That is a record. NASDAQ in the red, down 149. NASDAQ Composite Index down 0.6%. NASDAQ 100 Index down 0.4%. Advanced Micro Devices weighing on semiconductors after earnings. AMD down 6%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 0.5%. The VIX, Wall Street's fear gauge, holding below 16 with a 2-year that's currently yielding 4.18%, the 10-year 4.61%. Gold is up $181 the ounce. Spot gold surging now by 4.5%, $42.59 the ounce on gold. West Texas Intermediate crude down 0.6%, $75.33 a barrel. Brent, the global benchmark, still below 80, but at $79.61. Barrel of Brent up by 0.3%. New disclosures from Microsoft show it generates most of its AI revenue from OpenAI. Now, in a filing, the software giant said it recorded $24.1 billion in sales from the AI firm during the year ending in June. Microsoft shares right now trading lower, down 0.7%. Earnings news. We heard from the Walt Disney Company this morning. Disney up by 3.3%. Last night, Paramount Skydance reported shares of Paramount Skydance today. They're up 4.5%. Paramount, of course, seeking to acquire rival entertainment firm Warner Brothers Discovery. Warner Brothers Discovery shares, they're a little changed, down now by under 0.1%. After the bell, we'll hear from SanDisk. That stock down 1.5%. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
Hey, thanks, Charlie. Well, last week, New York State authorities sued the prediction markets company Kalshi for allegedly running an illegal, unlicensed gambling operation in the state, marking another legal hurdle for an industry that's won support from the Trump administration.
That's right. That suit filed Friday in state court in Manhattan alleges that Kalshi's prediction market exposes state residents, including those under the legal gambling age of 21, to, quote, serious personal and financial risk. This is coming from the New York Attorney General Letitia James, putting that out in a statement.
We've got with us Robert DeNault, head of enforcement and legal counsel at Kalshi. He joins us here in the Bloomberg Businessweek studio. Bobby, welcome. I want to jump right into this suit because Letitia James, the Attorney General, says, quote, no matter what they call themselves, prediction markets like Kalshi are gambling platforms, plain and simple. By ignoring our laws, Kalshi is running an illegal operation and harming New Yorkers in the process. What is your response to this claim that Kalshi is running an illegal gambling operation?
I mean, as both a New Yorker and a lawyer, I'm alarmed by the overreaching sentiment that's coming from the Attorney General's office. So Kalshi is a licensed, federally regulated exchange. By her logic, any federally regulated exchange that's operating with a federal license and overseen by a federal regulator can suddenly be subject to the whims of state criminal enforcement if the Attorney General of a particular state wakes up and decides one day that these contracts actually come within New York State gambling law. That's not how any exchange in U.S. history has ever operated, right? So we're here at Bloomberg. You guys talk about the New York Stock Exchange, NASDAQ, other exchanges. All of them could be potentially affected by the breadth and scope of the New York Attorney General's approach and legal theory in terms of how she believes she can regulate and bring to heel federally licensed exchanges here in New York State.
Bobby, are you saying you're the exact same things as the New York Stock Exchange or the NASDAQ markets? You're saying you're the exact same thing, apples to apples, then?
What I am saying is that federal law dictates that that is the case. When a federal law like the Commodity Exchange Act exists and provides for a way for an entity to get licensed by something like the Commodity Futures Trading Commission or the Securities Exchange Commission, that licensure and that federal regulation is what governs that marketplace. Now, if states want to litigate with that regulator on a case-by-case basis about what types of contracts might implicate some state laws, that's one question. And that's some of the lawsuits we've seen over the last year on sports. But this is much more far-reaching. This is claiming that that license means nothing, and if you don't hold a New York license, you're running a criminal operation, and you need to be run out of the state. And I think it's important to ground this sort of in history of disruptive sort of new players in marketplaces, right? Kalshi's new, but this sort of licensed regime has existed for many decades. We've seen similar playbooks used against companies like Uber and Airbnb, where states try to throw their weight around and bring crazy cases to block what customers want as a reasonable alternative. We think that that's a pretty similar playbook to what the Attorney General is following here.
So why shouldn't Kalshi seek a license from the New York State Gaming Commission? Why wouldn't you do that?
So it really goes to the way that the business operates. We are a federally licensed exchange that requires us to run open markets that are available nationwide. Our users set the price. Traders set the price. We match traders in an open marketplace with one another. We are not on the other side of individuals trading. We don't run a casino where people can come in and drink and play card games. We don't run a sports book where we profit when people lose. What we do is run open marketplaces where users define the price point, and that type of financial product, even if it touches on topics that is similar to a topic touched on by a sportsbook, the way that that product operates is typically what governs what regulations apply.
So even though people keep coming at you and say, gambling, 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 that's why you're not gambling?
So I think it's important to define exactly what they mean when they say gambling. To me, gambling is when you go up against the house. When you go to a place that controls whether you're going to win or lose, they're going to chase losers, they're going to maximize their ability to limit winners. They're not going to run like a true business. But where an exchange exists and individuals are setting price with one another, I think that it operates under a different regulatory framework. And it's not to say that a whole panoply of different topics can be touched on by different regulated products.
Right.
So we see concerns in options trading or leverage trading, retail traders moving into markets that are traditionally regulated markets at the federal level. I think some of the same concerns exist for those markets. And if you read the lawsuit closely, a ton of the definitions and the language and the descriptions that Attorney General James's office uses could easily be transposed onto Robinhood, crypto trading, derivatives trading, any sort of trading activity that the Attorney General suddenly decides poses a customer threat to individuals who want to participate in.
I mean, there is, in April, she did sue Coinbase and Gemini for running illegal gambling platforms. There were some, like, why do you think Kalshi was singled out in this typical, or this iteration of the lawsuit?
You'd have to ask the governor's office why, Kalshi's was signaled out. I think the truth is there are a number of prediction markets that would be affected by this approach. There's a number of other exchanges that would be affected. There are a number of exchanges, like Robinhood's based in New York, right? Novig, Polymarket, they're all based in New York, none of whom have been subject to the Attorney General's focus. So I don't know if that's coming. I don't know if you'd have to ask her office, but certainly, we're a bit alarmed that the Attorney General is seeing the scope of New York gambling law applying to potentially federal derivatives exchanges.
But I do think about exchanges, do think about the composition of the bets that are on, like, if we're going to use the gambling analogy that keeps getting kind of lobbied at you, I mean, if I think about exchange, there is incredible oversight, and there's rules. And so that there isn't, trades that are happening that are not legit or fair or right. If gambling is, as you say, there is no house, right? It's just two parties figuring out something. Where is the oversight and concern about the composition of the bets being made and making sure that they are true? Because I think that's where you get into gambling. If anybody can kind of put up a bet and another person can take the side, and who knows if those two sides didn't get together to figure out this bet. Like, you know what I'm saying?
So
that to me is where you get into the gambling. It feels a little loose.
Sure. I don't think it's loose at all. So I think that just to sort of zero in on some of the nuance that you just said, gambling is when there is the house. What you do on an exchange is where there is no house. There are two counterparties in a particular market agreeing on a price together and executing what we characterize as a swap, what the CEA qualifies as a swap. Those types of trades are heavily regulated under CFTC regulation. There are hundreds of regulations.
So you're saying all
apply.
the trades that are happening on Kalshi will be heavily regulated and oversight, and we understand the two sides.
They are currently heavily regulated and being overseen. I meet with the CFTC's enforcement division. That's my line of work at Kalshi. I lead our exchange enforcement. I meet with their enforcement division multiple times a week, but separately they have other division market oversight, other divisions that oversee the implementation of markets so that they are structurally fair for the participants operating in them. And that oversight requires Kalshi as an exchange, but all prediction market exchanges, to work very closely with the CFTC on the products that they offer. They have to self-certify them to the CFTC, who can revoke approval for those products. And the CFTC recently came out with a 267-page rulemaking that was specific toward prediction market contracts. So I think, it isn't correct to say these aren't currently heavily regulated.
We're speaking with Bobby DeNault. He's head of enforcement and legal counsel at Kalshi. He joins us here in the Bloomberg Businessweek studio. I want to shift gears and talk about some other recent news. It seems like you're really playing whack-a-mole at this point with these lawsuits. Like, obviously, it's keeping you busy. Also keeping you busy is enforcement. And former Congressman George Santos agreed to pay more than $35,000 to settle allegations that he manipulated a wager on your platform about whether he'd attend the 2026 State of the Union. Is it your responsibility to police that? Are you the one who recognized that and flagged it?
Yes, it is our responsibility to police that.
Do you have the resources? Like, this is one example, but do you have the resources to find every single one of them that allegedly has insider information?
So I'd pause there and say that's not our standard at the New York Stock Exchange, and that's not our standard in the securities and equities markets. What we expect our federally regulated exchanges to do is to have reasonable procedures to detect insider trading, market manipulation, et cetera. Kalshi has very robust, and in fact more robust than stock exchanges, policing measures to prevent and detect insider trading. We do have 24/7 market surveillance. We use a surveillance vendor, but also in the coming days are going to announce an expansion of our surveillance systems. And we police these markets both in real time and in retrospect. And we work with the CFTC to investigate specific markets and detect anomalous activity in those markets. We did detect the trading activity by Mr. Santos. We conducted an investigation that involved an interview with Mr. Santos, and we referred the entire matter and the evidence that we collected to the CFTC, which allowed them to pursue enforcement. But separately, in the derivatives and commodities space, these exchanges, like ours, have a responsibility to also bring enforcement actions directly against the users who participate on them. And so we pursue direct exchange enforcement in areas where individuals come on and violate our CFTC-approved exchange rules. And
How
we'll do
often
so
is
in
that
this case.
happening? And how many investigations are you triggering, like on a daily basis or a weekly basis?
So we sort of estimate quarterly, and volumes upticked quite a bit. So the investigations have upticked quite a bit, but somewhere between 150 and 250 a quarter become material investigations. We make a number of referrals. I think year to date, we've probably made about 40 or 50 referrals to the CFTC. These matters take time, though. The legal process, everybody deserves due process rights.
Yep.
So we afford people due process. We've settled or brought disciplinary actions in a number of cases. We're going to continue to do so. And by the end of the year, I'm sure you'll see a meaningful number of actions. I put for context, the SEC in the last year of the Biden administration bought 35 insider trading actions. So, I think the expectation would be somewhere in the ballpark of that number.
Do you think that there's some markets that are listed on Kalshi that are more susceptible to manipulation than others?
I think much like insider trading in the traditional securities and equities markets, there are certain paradigms that exist that create more likelihood for insider or manipulation risk.
Like mentioned markets, perhaps?
I think mentioned markets are a unique category. I don't know that they're necessarily more susceptible to insider risk, but I can see the context or argument for saying they maybe are more susceptible to manipulation where one person controls what word they say. On the counter of that, there's a small pool of people who could possibly be capable of manipulating that market. And because we're an exchange that collects user information, we follow KYC, know your customer rules for every single individual trading on the exchange, we have a pretty good idea of who's taking positions in certain markets that allows us to police mentioned markets just like we police all markets.
You're talking about Kalshi public companies, right? That's
part of it. I mean, that's the new.
Just 60 seconds. I know we've got to run. It's interesting. Earnings updates, KPI forecasts, earnings call mentions.
You loved this when you saw this.
I do. And I'm thinking, God, does this replace ultimately the earnings estimates that we follow? Is that the goal? Just quickly.
I think there's two goals. I think the first goal is what we find is so many people are using Kalshi as a resource just to obtain information. 75% of people who visit the platform are there just to look, to learn. They're not there to trade. And so this is a resource for people who might be on a trading desk, people who might be in a financial position where they want to analyze these really subtopic financial questions about a particular KPI. But of course, we are seeing academic research that shows these are somehow and sometimes more accurate than our traditional metrics in financial markets. And so it's exciting to develop further in that space.
Please come back and talk more about this. Because
Absolutely.
I am fascinated about kind of where this goes and who will all be on it. Bobby, thank you so much.
Thanks for having me.
Really appreciate it.
Robert DeNault, he's head of enforcement and legal counsel over at Kalshi, joining us on set here in New York. We are just a little over an hour from the close of equity trading.
We are indeed. We've got
that.
a market, kind of little changed, if you will. Just up about 4 points on the S&P 500, more than a 400-point gain on the Dow Jones Industrial Average. If you're following that index, up 0.8%. Really some outperformance there. NASDAQ 100, though, it is down just 0.4 percentage point. It is down about 113 points. So these averages are definitely off their best levels of the session. That's happening on a day when we talked with Katy Kaminski over at AlphaSimplex about yields. You've got a 10-year note with a yield of 4.61, so we have moved down a little bit in terms of the session. 2-year note with a yield of 4.17. Don't forget, on Friday we get that monthly jobs report.
I want to bring in Denitsa Sakova. She is looking at stocks on the move today. I'm Tim Stanovic along with Carol Masser. Let's take a look at some stocks on the move. We're joined by Denitsa Sakova. with some stocks that are moving. Hey, Denitza.
SpaceX, right?
Some
You
stocks
knew
are-
it.
Have we talked
How
about
did you know?
SpaceX? Have we mentioned it? Last time I checked, SpaceX was down. Ticker is SPCX. The stock fell as much as 13%. Of course, this is the first real picture we have about the company's fundamental. And actually, in many important metrics, analysts were pretty impressed. The metric that caused a lot of uproar is, of course, capital expenditure. This is something we've been worried for a very long time. And that number is 28.5 billion in the first half. This is significantly 4 times more the spending a year earlier. So incredible number, and that pretty much overshadowed the rest of the report. This is what we're
You
focusing
got to
on.
spend if you're doing AI. I
You
think
got
that's
it.
as simple, but investors aren't so loving it. This is, I don't know. It's an interesting story, and I think it's going to take a little bit longer, right, to figure it out. But investors not impressed today.
Yeah, I mean, you look at AI revenue, and it's a little bit over 3 billion, and then this is so much less than their connectivity business. We're talking Starlink. So you're having this, like, you're spending so much, and so far we're not seeing a big payoff. So I understand the anxiety. And also on Thursday, insiders can sell shares,
Yeah.
so things are very volatile week.
They don't like it at this price. How are they going to like it when there's so much more out there? New York Times, let's go there. Ticker NYT, stock down 15% as we speak.
Pretty rough day. This is actually the worst sell-off since 2012 if we continue to see the price like that. Actually, the report wasn't so bad. We saw a lot of the metrics in line with estimates. People seem to be worried about spending again. So what Citi is saying, while most metrics came in line with guidance, the firm suggested operating expenses were higher than expected. They're pointing to sales and marketing as the 2 big drivers. We saw a big growth in digital-only subscribers, but compared to the trend they've had for quite some time, this is slowing down a little bit, and analysts are a little bit worried. Last year, they had a great year. It was up more than 30%. So I think the bar is pretty high, and investors are anxious about any type of capital expenditure. Any type of spending.
All right, let's talk travel, booking. What do we hear?
Yeah, travel is doing great, booking, and it's actually coming from the US. We've been all very worried about travel with obviously fuel costs and all that, but the US, the World Cup has been boosting travel. The company is up nearly 7%. The ticker is BKNG. Travel demand has remained firm. We're yet to see, because we're seeing very mixed signals. We saw a lot of the hotels reporting, and it's very different reports.
Agreed.
So we're done with the World Cup. What happens next? A big questions to see, but a lot of optimism for booking, which has had a pretty rough year. Year to date, it's still down despite the boost we're seeing today. So
I want to go on a trip.
I need to go.
Fortunately, you are going.
We have
on a
some
trip
work
soon.
ones in the fall.
Well, you're going on vacation soon.
Yeah, I know, but I'm not getting on a plane. But yeah, I am. All right, Denitza, thank you so much. Denitza Sekova, she is Bloomberg News cross-asset reporter with Stock Movers Podcast. Check out our Stock Movers Podcast. They are 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, coming up next on Bloomberg Businessweek Daily, if you're sticking with us on Bloomberg Radio, Bloomberg Originals, YouTube, and more, we've got the CEO of Lime, Wayne Ting, joining us in just a few minutes on a day when the stock is hitting a new all-time high. If you're staying here on TV, the close, it starts now.